Hey, what's going on, guys? This is Brandon, your trusted realtor, and I'm coming to you with another great episode. I'm going to talk specifically about loan types. And I think it's so incredibly important that we really structure the conversation. When you decide to buy a home, it is important, as you've heard me preach before, that you have a plan to success. There is a pathway to success for each and every individual, as long as we understand the situation, the factors behind them, and then identify an approach that's going to work. Sometimes that approach may be that we have to wait a little bit. Here's some factors or things that we need to work on. But one of the fundamental or first things that happens is structuring your loan and identifying really what is the type of loan that is going to work for you and be ideal. Ultimately, there are 4 loan types that exist, and I want to talk about those today and really demystify them, especially that overarching myth that you have to have 20% down in order to get into a home. So let's dive right into it. First, we're going to talk about conventional loans. A conventional loan or conventional mortgage is a loan type that is not guaranteed by a government entity. It is normally available through a bank or some other private lender, and or through Fannie Mae or Freddie Mac, one of the GSEs, the government-sponsored entities. Potential buyers have to complete a mortgage application from a specific lender in order to determine whether or not they qualify for the loan. And conventional loan interest rates typically are a little bit higher than those that are offered by FHA, a government lending institution, or even USDA, the U.S. Department of Agriculture. Additionally, each lender provides different kinds of loans or loan types or loan products specifically. A loan product is a suite of loans or services that are included in a loan based on your qualifications. A good example of this would be a set interest rate. There are some instances where your lender will provide you a fixed interest rate or a highly competitive interest rate or down payment requirement because of your credit score. This will be an example of a loan type or loan product. There are also instances where your lender may lock in your rate, and that rate lock may be affiliated with the loan type or loan product that lender offers you. It is here where most people have the misconception or the opinion that they have to put 20% down in order to get into that property. That is when you listen to street attorneys or street realtors and street lenders. And those individuals will always lead you astray because the information and the guidance that they give you, while it may be relevant, is relevant to their situation. And typically most individuals get caught up in the myth that you have to have 20% down in order to get into a loan. And it's even the case, depending on your circumstances uniquely, that a lender will not necessarily require that you have to put 20% down. Remember, everyone is an individual and everyone's case is different. So it pays for you to talk to a lender that you trust and that's going to be able to help you meet your specific needs. One way to identify a lender you trust is by working with a realtor like myself, because we have a network of different lenders that we work with, and we've begun to compartmentalize those lenders by individuals that can meet the needs of certain types of clients, i.e. those who work with down payment and closing cost assistance, those that are good or better with working with just your high-end or luxury clients, etc. Whatever the scope or the nature of that lender or what you need, we can begin to identify someone that can assist you. A last point that I'll make here is that don't be afraid to get a pre-qualification. We've talked about this before when we talked about the difference between a pre-approval and a pre-qualification. The pre-qualification is basically going to be everything but the social security number, right? They're going to pull all of the information. They're going to get your credit information. They're going to get your income information. They're going to get your assets. They're going to get your debts, but they're not going to pull your credit. And it'll give you a sense based on that kind of global understanding or positioning of where your finances are, of how much that bank or that financial institution may lend you. While it is not an absolute guarantee of funds, you at least get an idea of the scope of how much is going to be available. Generally, as it relates to getting any type of lending or pre-approval or getting a sense of what you qualify for. Now, let's move on to the next loan type. That is the VA home loan. Now, VA helps service members, veterans, and their families become homeowners. And as part of their mission, they also provide a home loan guarantee benefit. It helps you to obtain, retain, and adapt a home for your own personal ownership. VA guarantees a loan. The loan itself is provided by the lender, such as a bank, a mortgage company, or some other non-VA entity. VA themselves do not provide you with the loan. Through the VA Home Loan Guarantee Program, or protect a portion of your loan against default, which means that it reduces the risk tolerance for the lender, because if you do default on that loan, then the lender at least knows that they're going to get some money back, and then they're able to offer the veteran or the service member more favorable terms on the front end. Some of the real advantages of the VA Home Loan program is that VA home loans have lower interest rates and closing costs than conventional loans. There are even some cases where lenders, as it relates to a VA home loan, will absorb all of the closing costs. VA does require that an individual has to pay a funding fee, but that funding fee can be rolled into the loan amount. And in some cases, I've seen actual lenders that actually pay the funding fee for veterans. So it's really an amazing program should you choose to participate in it, and you can reuse it. Additionally, you may not have to make a down payment. Mortgage insurance is not required. One thing that we've talked about here before is private mortgage insurance. Private mortgage insurance is affiliated with more so with FHA programs, and basically it requires that it's a guarantee or money that you pay into a pool that says in the event that you default, some money has been set aside to insure against the loss of the home or the property. With a VA home loan product, you are not required to pay that private mortgage insurance. That is significant. How significant is that? Your mortgage insurance can be anywhere between 25% and a third of your mortgage amount. So it definitely impacts the amount that you pay. And you do not have to pay a penalty if you pay off your VA home loan early. Additionally, if you are eligible for a VA guaranteed home loan, you can use the loan to buy a home or residential condominium. You can build a home or simultaneously purchase and improve a home, or you can refinance an existing non-VA loan. So it's really an amazing program or loan type for anyone who's interested and that is a veteran with other than dishonorable service, and they are eligible for this program. Two other things that I didn't mention that I want to make sure that I cover is that you can also refinance an existing VA loan to reduce your interest rate. In addition to that, you can also buy a manufactured home to be permanently affixed to a lot. That's right, you can buy a mobile home, fix it to a lot, and make it your own. There is such a diversity of options that are available to you as a veteran or anyone who wants, or service member, or anyone who wants to use this loan. By the way, you can also obtain energy efficient improvements such as solar panels, etc., on your property. Just have to find the lender who's going to be able or willing to do that type of loan. In the reality, there are few and far between as far as lenders who are willing to do the energy efficient portion of it, because just sometimes the juice isn't worth the squeeze based on the amount of money that VA will provide as it relates to that piece. Whole other more complicated subject. We can talk about that later. Now, let's move on to the next loan type, number 3. That is going to be, are my hands ashy? Yeah, they are ashy. Okay, let's move to the next loan type, USDA loan. The USDA loan offers mortgages to individuals that want to buy a home in an eligible rural area. So immediately I know you're thinking, Brandon, this is not for me. I do not want to live in a rural area. But the reality is 97% of the United States is considered to be a rural area. So I'm going to leave a link down below so that way you can check out an information graphic. I'll probably display it somewhere here in the corner so you can check that out. Based on the USDA, most of the United States is considered rural. So you can pretty much use this program almost anywhere. It is an amazing opportunity for you as a home buyer to get into a program. The benefits of this program include, but are not limited to, you paying zero down payment. It has an amazingly competitive interest rate requirement because they guarantee the loan. You have a low monthly mortgage insurance. Rewind back about maybe a minute or so ago, where we talked about private mortgage insurance. So you are probably going to use this program and look at have a slightly higher mortgage payment than if you were to use a program where you did not have that private mortgage insurance. And they're going to have very flexible credit requirements. So also a very underutilized program here in the States, but an amazing opportunity for anyone who's looking to figure out what's the best pathway for them to get into a home. Next, and one of the most popular programs far and wide, is the Federal Housing Administration, FHA. FHA offers a very popular mortgage program, but it is done through approved lenders. The program emphasizes homeowners with low to moderate incomes, and so that way it enables individuals to access home ownership without the stereotypical 20% down payment. Usually these loans require a lower minimum down payment and credit scores than many conventional loans. FHA allows you to put down 3.5% of the loan amount versus a conventional loan, which can be in many instances significantly higher than that, again, based on your credit. Remember, FHA is really targeting low to moderate income individuals, so it becomes more advantageous for you to be able to save money using this program, especially with a lower credit score. Typically with a conventional loan with a lower credit score, the risk goes up, so they're going to charge you a higher interest rate, or they're going to want more down payment from you. For FHA to qualify for this, you have to minimally have a 580 credit score. Now, I'll caveat that by saying FHA requires that you have a 580 credit score. That does not mean that the lender or any lender that participates in the FHA program will accept a 580 credit score, right? You kind of see the difference there? The lender is still the one who makes the loan. They are the one who has the money. They don't have to give you the money to buy the house. So just because you have a 580, and we talked about this before when we talked about lender overlays, which is where your lender puts additional rules that are stricter than what the federal government offers or what the federal government requires. So definitely something to consider. One fun fact about FHA is that even if you have a lower than 580 credit score, you can still get into a property with the right lender who's going to make the loan for you, and B, if you put 10% down instead of the traditional 3.5%. Whole nother conversation. I'm a firm believer that get your credit to a place where you can just benefit yourself. Home ownership shouldn't be a stressful race. Try to minimize that stress anywhere you can, and making sure you're prepared on the front end. One fun fact, just in case you watched all of this and you were like, hey, I know all of this information as it relates to FHA. There are a couple nuggets here or there, and I didn't feel like I really took away a whole lot from this video. I want to let you know there's a couple other things and programs that FHA offers that you may not be aware about. There are actually, in fact, 5 programs or 5 mortgage loans or loan types that are available and offered by FHA. In addition to their traditional mortgage loan, which is what we talked about, where they finance and provide 3.5%, they also have a home equity conversion mortgage. Essentially, this is a reverse mortgage that allows the homeowner that is age 62 or older to exchange home equity for cash. They also have a 203K mortgage program, and within the 203K mortgage program, they have two sub programs, the limited and the full program. And the 203 mortgage program includes extra funds to pay for energy efficiency improvements intended to lower your utility bills, as well as assist in refinancing and structural or aesthetic improvements of the property. They also have an energy efficiency mortgage program, and it's a mortgage that includes extra funds to pay for any type of energy efficiency utilities that you have. And then they have a Section 245A loan, and this is a graduated payment mortgage with a lower initial monthly payment that gradually increases, usually in situations when a person is expecting that their income is going to increase. And they have a growing equity mortgage where there are scheduled increases in the monthly principal payments result in a shorter loan term. So definitely a lot of great options that are offered and available out in the ecosystem. The name of the game is partnering with a trusted resource like myself that can direct you and guide you as you go forward. Hopefully you've gotten something from this video. Make sure you like, subscribe, and hit that notification bell so that you can stay tuned in tune to the latest and greatest tea in the DMV and abroad. Take care, and I'm your trusted realtor. Talk to you soon.